Hi there. Hey, I wanted to introduce you to my friend and client. Became a client, and then over the last few years have become a good friend. And his name is Todd. And anyway, I wanted to say that there's a couple of things I want you to look out for in the video. That is that around the 2.5 minute point, Todd references about how when he was searching around trying to find more information about this, that he had come across another agent who had a client as a dentist that was a dentist, and this dentist had got himself completely out of debt. The whole dental practice was out of debt. I just wanted to point that out, because I know that there are some people here that are in the dental world. So, also I wanted to point out too that at about the 14-minute point, I say something that isn't quite accurate, in the sense that it's not that it's wrong, but it's not the complete story. And so I say, that the insurance company charges a bit more in interest on a loan, a policy loan, than what the growth is inside the policy in terms of percentage in a particular year. That could be very well true. But when you have a policy maybe that's been enforced for a few years, just as for instance, if you were to take out $500,000 after you say you had $500,000 in cash value after 5 or 10 years, just depending on how much you're putting in, and you take a loan for $100,000, so that 5% interest that the company is going to charge you, simple interest, is on the $100,000, so that's $5,000. But your other $400,000, and actually, depending on the company, it could be all $500,000 of that money is growing. And so the growth of that amount of money versus $100,000, it's going to be growing faster than what you're going to pay in interest for the loan. I just wanted to clarify that wasn't true what I was talking about. So anyway, that's all, and I hope you enjoy our discussion. I want to apologize for Todd's audio isn't quite right. I thought we had tested it and it seemed great, but then when I listened to the video later, I was like, oh gee, my voice is really loud and his is really low. So anyway, I apologize for that. Enjoy the talk, and you discover Todd's journey. All right, see you soon. Hi, thank you for joining us today here at Blue Sky Financial Flow. And I wanted to say that I'm humbly thankful for Todd getting on a call here with me. He's a very busy guy, and so his time is quite valuable, like many of us. And so thank you, Todd, for joining me here today. Todd has been how long have you been a client? 2 or 3 years?
About 3 years, I think.
Yeah. So it's still really fresh. It's still new when you think of it in terms of, you create this monetary system, banking system, saving system, whatever you want to call it, and you have it for your lifetime. So anyway, well, again, thank you for doing this, Todd. My first question that I had was, this is, like I just mentioned, this is really, in a sense, this is not really about life insurance, although there is a death benefit attached to it. It's more what we're talking about when we think about creating a monetary system. That's just it. It just happens to be that whole life happens to be the best place to create it. So I just wanted to ask, before you started this journey, did you
have any idea, what were your thoughts about whole life insurance?
Yeah.
What did you know about it? Or yeah.
Honestly, I really didn't look into it much at all or have any kind of pre-existing information about it. I kind of stumbled across it when I was coming across random. I don't remember where I was searching, but I think it was a reel or a TikTok or something random that I came across, and it was talking about this system, and if you follow it, and I went and I think dug into it a little deeper for one person. I think he was out of New Jersey. He was talking about paying for cars, or there was like a dentist he had for a customer that was able to pay off his entire like debt for his dentistry practice. So it was just kind of like, oh, that's interesting. Didn't really get a good concept of it until digging a little deeper. Um, was kind of leery about it at first because it was kind of like, is this, I don't know, like a scam or something like that. So after digging around, I think came across Nelson Nash and then found you through the website. And then just talking back and forth with you, kind of got a better or clearer picture on what was in there. Watching Nelson's 1 hour video on YouTube, about an hour, whatever it is, and then reading his book, the Become Your Own Banker. Um, that really kind of solidified it pretty quick. And I'm usually one to move pretty quick when I see things if it makes sense and there's not a lot of shady dealings with it. So
Yeah. I would say that from the time that I've been doing this, you did grasp it rather quickly. You didn't so much get into the weeds about everything. You just looked at how it worked. We talked about, how you can use it and all, but it was probably the mechanics of how whole life dividend paying life insurance works. And when I say dividend paying, that means that it's with a mutual or fraternal company, not a stock company,
mm-hmm.
which makes you part owner of the company and therefore you get the dividends. So yeah, we went through the mechanics. I think the whole idea of how you can utilize it, if you had a pool of capital sitting somewhere, whether it's in a savings account at the local bank or
Mm-hmm.
having it here, that you had access to it, but there were so many other added things that go along with it that you can't get on a savings account.
Sure.
Um, yeah, so I think that's probably how a lot of people find their way to it is they kind of stumble upon it.
Mm-hmm.
Um, so you did a little bit of research, but not terribly exhaustive, and then you found your way to talking with me, and I think it was only a few conversations. I could be wrong. Plus, you read a lot of books. I shared a bunch of books. You read books by my mentors and all that. Um, and this might not be a great question, but when you were looking about, you mentioned that you were a little cautious in the sense that is this a scam of some sort and
Mm-hmm.
all that. When you were looking out on the websites, YouTubes and all these other podcasts, did you find any naysayers about this, or did that not really come up?
I think the only thing I've come across, and it was, I think, after the fact,
Mm,
um, that there's people that are one way or the other, or my way is the best way. And so just different variations within the insurance agency and the industry itself of their take on which way is the best way.
yeah,
So,
yeah.
um,
Yeah. So, do you remember anything that jumped out at you that either caught your attention when you were learning it?
as
That
a
you.
negative, on the negative, nothing that I can think of like, do not do this. It was more of people just trying to highlight their way of doing it, not so much that whole life was bad, but
Mm,
just their approach to it. Come over here. It's like a car salesman. Everyone's got a better deal.
yeah,
And it wasn't necessarily like negative towards one or the other. It just said, this is my best way. So,
yeah.
mhm.
And did you find things that were really positive that you were surprised by when you?
um, I think most of the information came about afterwards. I'd done probably about 2-3 years prior to meeting you, a lot of changes in how I looked at the financial industry as a whole and what practices were kind of like indoctrinated into you maybe over the course of a lifetime. Like, this is the right way to do it. This is the right way. This is how you should save money. This is everybody should go down to the bank and put your money in the bank. And
Mm,
just pretty much an all-inclusive look between it was probably a course of the last year of reading that it kind of snowballed into fine-tuning and really kind of weeding out some of the noise that's put out there for what seems to be the approved way to put your money in or invest, and really started kind of working towards, I guess, whole life insurance was one of them that popped up, and it kind of met what I was looking for. So most of the education for it really came after the fact. So it it kind of met my criteria. So I jumped on board, and I'm like, well, some of it is jump by or a leap of faith into some things, and things in the past have not worked.
yeah,
And this so far has been quite different experience than ones of the past, just for everything's adding up the way it should. And it's not the shady car salesperson that is just trying to get a quick buck, and then you don't have customer support afterwards. So,
right. Yeah, because it's an ongoing
mhm.
conversation, education.
Definitely, it's a lifetime of educating yourself, because there's so much involved with it that um,
Yeah.
there's a lot to know.
Yeah. When I think around the financial world, it's enormous.
Hmm.
And to understand how it's really working out there, this is more of a foundational place where there's a lot of certainty.
Hmm.
Um, and yeah, so it's a great place to start from and grow uh, capital and your wealth that you can have access to,
Hmm.
yet it continues to grow. So I think you had told me at one point that just to talk a little bit more about that, jumping into having a leap of faith,
Hmm.
that Jennifer had said, yeah, if you think this is a good thing to do, just you've always looked out for us the best way you can, and it turned out as a good thing. And I recall our last meeting, personal, face to face, was at your cafe there in your town.
Hmm.
um, and Jennifer, your wife, was there,
Yep.
and she, at some point toward the end of our visit, she turned to me and said, "Oh, now I get this." There
Hmm.
was I don't recall exactly what it was, but there was
Sure.
something about it that turned a light on for her. Um, and she actually had the experience of deciding how, well, there was a point, maybe you can tell the story, that you were looking for a low interest loan.
Uh, the low interest loan that we were looking for was wrapped up with the business, so we were able to get a couple grants when we were building the building and getting all the equipment for it. But getting away from the bank itself and where we had our loan through, we were able to find through one of the local electric co-op companies that was offering a low interest rate loan through them, significant. I think it was closer to like 2 or 3% as opposed to what the bank was offering. So, but to do that, we had to have money on hand for the bridge loan to show that we actually had the money there. So we borrowed from our life insurance policies to bridge that for, I think it might have been a full month or so that we pulled out. I don't remember what the full dollar amount was, but we had to show at least a certain amount sitting there. So we transferred it all out, put it into the bank. They saw it there. It was good enough. We were able to transfer the loan from the bank over to the co-op and then put all the money right back in with, I think it was hundreds of dollars of interest, maybe not even. It might have been a couple $100s, which was like and there was no paperwork with the bank, and it's instant, pretty much. Yeah. It was pretty seamless to do it, and it was a lot cheaper to spend about $200 to do that than to try and get another loan from the bank and the paperwork that's associated with it. So it was a very quick process, and then it just opened up, saving us tons of interest going from the bank, and now it's all at the co-op, and it's just a regular monthly payment, but at a significantly reduced rate from what the bank was offering.
Yeah. So the money inside the policy gave you that option.
Yeah.
Now, if it had in fact been sitting in that bank, and you didn't have policies, you would have accomplished the same thing. But while you had that loan, your money was still growing, so that becomes uninterrupted,
right?
And the interest, is what it is. But so what yours is growing at doesn't completely keep up with the interest that they charge. They're going to charge a little bit more than what the growth of the thing is. Just otherwise, they couldn't be in business.
Sure,
they'd be giving away money. I had a unique experience with you early, just a few moments ago. You mentioned that you took the money from policies. So you have 4 policies that
I do, 3 that I own, and then my daughter had some extra money laying around, and I just gave her the suggestion, and she's like, oh, so she opened up her own policy. So she's now got 2, her own and then one that I have on her. So.
Right. Yeah. That was, I've said it to you before, that was one of the most exciting times for me, was your daughter, Bailey, jumping on. I guess she had read some of the books as well.
Oh, yeah. I share a lot of the books with her, and then her now new husband is also very much on board with all of the same reading of the whole life policies, and he's in a bunch of other stuff. He's actually getting his major in finance, so he's pretty deep in all of this.
Yeah. And I had the opportunity to meet with them both last year, so that was great to meet him. Anyway, so I know this might sound like a redundant question, but now that you've been doing it for a few years, how do you feel about the decision that you made to go forward with it?
I'm pretty happy with it. It's still working in the background and still learning about it, even with a busy lifestyle. It's kind of a double layer of security, the security that it's there to protect the family, individuals, and then also just the security that it's not going anywhere. It's just sitting there kind of growing as we go about our daily lives. So still lots to learn about the ins and outs of everything, just self-education to make sure that have a full understanding, and kind of like you got to keep learning about it, so you use it to its fullest potential. So it's not something you're just going to get on day one and understand it all. Maybe some people might, but it's definitely not a cosmic process or vehicle to use. Just takes a little bit of extra learning, but with that, you get a lot more benefits than just going down and sinking your money into the bank, because they're working in the background using your own money to make them. Now I'm just making more of it myself, I'd say, or in a more secure way.
Yeah, yeah. One thing I guess in a sense I kind of harp on it, that when people take loans, that the insurance company, just say for instance, just a number, people are going to get charged 5% by the
Mm-hmm.
insurance company, but to pay yourself more than that, in other words, so set up an amortization table, if you will, a loan agreement with yourself at maybe 10%, because that's what a banker's mind would be like, that you would want to make interest on loaning the money, whether it's, I know you're both the banker and the consumer at the same time, which is it's a weird thing to get your mind wrapped around. But as you've already stated that you have multiple policies, people can have many, many policies and run their whole lives through these
Sure.
things over time. But so can I ask, what kind of encouragement or advice would you give someone that is just coming to this?
Encouragement or advice? Advice, I would say, definitely do your due diligence, read about it so you understand it. So it's not just kind of haphazardly jumping into something. You want to have some kind of foundation or basis with anything you do. So unless you're just willing to just hand your money over to anybody, that would probably be the biggest thing. Just have a basic understanding, do a little research, due diligence on even at the most basic level, just kind of understanding at the most basic level what's happening, and then you can get into the weeds later on. But that would probably be my
Yeah,
advice.
yeah. So you said that you continue to learn, and you listen to a lot. You listen to a lot of stuff, don't you?
I try to listen to podcasts on all kinds of things, and it kind of jumps from subject to subject. Sometimes I'll be on one for a month and then jump back to something else. I usually tend to just start listening to one and listen through the entire string of them for the last 2 years that they put out, and then move on to another one.
Yeah,
And kind of try to be unbroken.
yeah, 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 yeah. You spend a lot of time in the air, I'd imagine, where you have to be focused. Um,
Most of my time is in airports or traveling around or sitting around in hotels if the time is presented. So
yeah, yeah, yeah. You. How would I say this? You are a private pilot,
yeah,
corporate
yeah,
pilot.
fall into the realm of private corporate pilots. So
Hmm. Yeah, yeah. So yeah, so when you're in the hotels and you're looking for something to learn about,
mhm.
you have that opportunity. Um, well, is there anything else that you would like to add to this? Just if there's anything, I don't want to belabor this.
Nothing specific that I can think of. It's been a great vehicle to use, and as I said, there's not just this, but many others you can use. So this is just one of many. Always looking for opportunities, um, but so far I've found that this has been pretty easy to use, and everything that has been advertised is working as is. So. Um,
Awesome.
just the ease of it has been really great. Being able to use it. Really not a big fan of spending a lot of time writing out long forms and applications for loans. That's long gone now. Being able to use this where it's just like, hey, I'm going to borrow some money real quick. Yep. How much do you want? And you get it within a day or two, use it as you need to, and then pay it back on your own schedule. however you determine, and you move on with life.
Yeah, wonderful. Yeah. Well, again, thank you for your time, Todd. I really do appreciate it, and we'll keep in touch.
Yep, for sure.
All right. Take care.
All right, thank you.
Till next time.